Good afternoon, folks. Welcome back. We got 8 minutes. 8 minutes. If you didn't buy something today, or if you've been on the wrong side of the market, oof. Oof. Couldn't imagine. Couldn't imagine being on the other side of the market. Unless you're shorting. You know what's really ironic on a day like today is if you're in anything that we've talked about, besides the transition at open and looking for new buy opportunities there, if you're in any energy, you're in any healthcare, you're just sitting in your position going, what am I doing? I'm up 2.5%. All of the big energy tickers, all the oil's up. The oil bet paid off. What should I be doing right now? While the market turmoil continues, is my window open? Can you not see? Confirmation. We can see. I can see. I think Brian's seeing things. Anyway, tech, NASDAQ down almost 2%. The SPY, and now all of these are sitting around that support right now. SPY coming down to its lowest support. It's about 1.5% down. Small caps taking quite a number off, coming into support as well where the S&P and NASDAQ are. On the value side of small caps, it's only down 1.5%, and then the Dow as a whole about 1.25% as well. So really coming from the average, but again, you can hear the outside ambience. Really, I got a big fan next to me. Let me see. Let me fix it real quick before we get going. And it wasn't doing that before. Shouldn't be. You can hear the outside ambience. Really. Did you guys hear? I didn't hear it in the morning. It was the same. Let me see. One sec. All right. How's that? How was that? You shouldn't be able to hear anything. You shouldn't be able to hear a damn thing besides me. Does it sound like the normal me with no background noise? Yeah, I mean, I can see it on my side. You guys are not hearing anything but me. I don't even need to see you. I see before. Looks like my thing got turned off. All right, so anyway, coming into close. Are we buying into close? We already talked about with the positions that we transitioned on from open, something like CCL I gave the example of earlier. We tried to buy on the bullback here. What happened here? As it reversed, got out of the position. We talked about taking profit a bit earlier. And what are we doing? We're waiting for open tomorrow. Now, again, this is for all the transition positions that we had. Now, get a few minutes left in close. I don't care what happens in the last minutes of close. The thing to remember here is that for all of our big energy positions, we continue to push. I'm guessing most of you didn't have to do anything with those. Things like big big healthcare companies like Anthem, for instance, right? You didn't have to do anything with these positions. These are all up. They're all over 2%. There's no energy that's not over 2%, and none of them pulled back towards a low from yesterday. So, again, being on the right side of the market feels pretty damn good. I get to go to lunch, didn't have to fucking sit at my computer. While, by the way, why during that time, sitting at lunch, that the market's coming back, right? Shorted at open on the things I wanted to short, finished it from that first push coming out of the short, and that was it. Now, we had Powell come out. He continued to be dovish as ever. I know the yields came back up, and we'll take a look at them. The yields came back up on the 10-year. It's not a spike that we saw before, though. It's not the same type of spike. And so in terms of a continuation, the reason you can tell that it's not the same is that all of our value tickers that we continue to look at did not get affected during that time. They didn't get affected, and so it's the good kind of yield that we talked about earlier, where that yield increasing actually was very good for us. And again, for those of you that decided instead of shorting and then instead of looking for like a new pullback opportunity here that you're going to buy at open, this should be very good for those of you that were able to do that, take profit, hang out for the day, and look for that Friday open, that Green Day Friday going into the weekend. It may not be there, but it's high probability for tomorrow, even on just the same as the week before, on a retracement day, because this is the first time we really came down in here, even on the small caps. It's gonna be pretty damn good, I would say, for tomorrow for an opening buy. So we'll see what happens here in the last 40 seconds or so. But in terms of what was up, energy continued big. The bet on OPEC paying off because nothing changed. So we get good results on oil today. Those, again, if you're not a part of that energy trade, again, that's the sector that is up the most this year, along with banks. Did you have to take profit on banks today? It pulled back a bit. Did you have to take profit though? Unlikely, unless again you had entered on more on this new pullback with short terms, and you would have again made a decision based off of the contract you're in, right? So we got 5 seconds here. Let's see. Not seeing anything change at the top of the list here. Nothing change. Again, all of this is energy, oil. It comes into coming from bios, healthcare, big healthcare companies. See where the SPY finishes here. Coming back. This is going to be, tomorrow's going to be quite the day, boys. Again, what are we doing? We continue to take the trade every single time it comes off one of these candles. We take that trade to the upside every single time. Whether it's going to be, we push it for a day, for 2 days, for half a day. The points that we can get there, and especially from a Friday into a Monday, again, you could have done nothing except trade every single Friday. And you would be making 100% trades no matter where you threw the dart. No matter where you threw it. We have an understanding that, again, in terms of this week, what it's been doing so far, this pullback here in terms of the market, this is the opposite to the move that we've been making, right? The move on energy, banks, travel finally having a transition day today, which again, we talked about whether that was going to be the case or not. We were looking for the transition anyway. Today, obviously, big selling again in tech. Now, there's some very interesting things going on here. I know Facebook's been mentioned, and yes, there is like a 5-second delay or something apparently. Facebook, Google, some of these, again, these were fine. A lot of these were fine. Google keeps holding the value up here, right? So when we think about some of the numbers here, it's really the broader market and not so much even the mega caps right now that are getting beat up. These did better than the average. They did better than the average. That's the reality. All of these did better than the average. And so mega caps did completely fine, probably the liquidity there. And so it's really the broader market, some of the not smaller caps, but sort of the in-between positions that affected the NASDAQ more. Overall, it's a downtrend consolidating. And again, we continue to short through some of that. And if not, then you're on the sidelines and continue to push your value positions that, again, if your positions are going down, then you're probably in the wrong positions there. right? And I know it continues to probably bug some of you, but again, you're missing out on the move every single day, and it's been the best sector this entire time, and we trade what's trending. You don't go against the trend unless you're shorting that, right? So it's very important to continue to see that, oh shit, I missed another day, huh? Okay, I missed another day. Great. These kind of ideas. Now, it's very important that you were able to make decisions from open today. If you did not transition when we talked about it from open, now you don't know whether that's going to have to happen or not, but you need to be planned for it. Now, if you took the 65 breakdown bearish tickers on that list that I posted last night as a bullish sentiment, that apparently I posted 65 bearish charts, patterns, breakdowns, and you took that as sentiment that today we're going to be buying long, all kinds of calls today, and you didn't find that that list was a bit of an outlier from the usual, in that, oh, he just, you know what, he decided he's going to post a bunch, he wasted his time posting a bunch of bearish tickers to short, planning to short, and you said, fuck it, I am going to go long on everything today because I've been sleeping all week, been sleeping all month this year, and I'm going to finally buy everything. And then you're now down again. Look in the mirror and compare, right? Compare. How was your lunch and what did you get? We went and had Italian. Had a little bit of a brunch Thursday. Because New York's a little fucked up right now. Still. But sat outside. It's really nice weather outside right now. Sunny. So it was very nice. Let me look in the profit section before I go further. Mobsky, plus 4.8%. Played both ways. A fellow New Yorker over here, probably the son, helping him out today. Played both ways. You played both ways and you shorted. All you had to do was just buy a short. You could have thrown a dart anywhere, right? Anywhere on that list. Let me show you the short list. Now, this did change come close. Let me show you, though. Here is that short list that I posted last night. This does not include the other 20 or 30 tickers or so that I posted before, which you could have continued to take advantage of course, and there were some charts for those. Take a look. This is including the bounce back. This is including the bounce back from close here. These are trades that you can be in and out of, and it's very important you get in and out of them. If you're buying puts, you get in and out of them. You don't hold them into tomorrow. But go onto the Google sheet. Those of you that never look at the Google sheet, go look at those tickers. And I don't have charts for some of them. You want a chart? Just ask. I'll post the chart. I just don't want to post 65 fucking charts and have to draw them specifically all for you guys, right? So I would go look at those because, again, another missed opportunity and another probably long-term buy, or the long side bias that you have, that since you know you can't short, you look at everything as being bad if it's going down. If it's pulling back, it's opportunity for you to short, and it's a new opportunity for you to buy. So those of you that continue to use the FinTwit, the financial Twitter baloney where every time the market's pulling back, it's bad. It's not bad. This is volatility you want. You know how good it is to fucking feel to push long positions during this? It feels fucking awesome. It feels awesome to be able to be in a long position and push this. Because the market's pulling back here and you get to short this, you're basically doubling up on your trade by not only shorting, but then going long on the other side that's actually making gains, right? So look at some of those, and again, if you need help with that, then you're gonna get there, but the only way to learn it again is to make the trade. Very important to understand that there's nothing you can read or anything that's gonna change the fact that the experience comes from you just placing fucking trades. Just from you placing trades. Fibs with a big boy earnings today, $1,250. Congrats, my friend. That looks like a great number. Let me hit you with the gains. Ecto says, probably down bad. Haven't checked it because it doesn't matter. Okay, I'm good with that. Hopefully that means you get stopped out or something then, I guess. Brian with the minus 104. Sounds like a break-even day. LSU with the minus 650. I think he had a big gain yesterday, so maybe erase some of those. Minus 2% from Spoon. Longs and shorts, okay. And David with the minus 100. So some break-evens there at the tail end. And again, that can certainly be certainly be the case as well for today. That depends, I guess, on whether you had to transition or not. Not exactly sure what the cases are there. I would say this is certainly a day that you can be losing money on. Certainly lost some money on some trades as well. So again, it's not always paradise, but I would say that, again, if you're on the right side, you should be able to navigate through a day like today and get excited for a day like today, especially going to tomorrow again. I want you to remember last Thursday. This is the 25th candle here. This was today. This last Thursday. This week here. I want you to remember this candle and what it just set up for coming into this week. Remember I asked you on Friday, how many of you bought the dip on Friday? And then you all bought, and then how many on Monday? You all had positions up on Monday, right? Tell me, is there a difference? Is there any difference coming this week? No, it just takes one trade. It takes one trade that you're going to place tomorrow. It takes one trade. You didn't make any good trades this week? Well, it takes one trade tomorrow. It takes one trade tomorrow that you buy, that you can push over the weekend, that come Monday is going to give you 100%. It takes one. So all you got to do tonight is look through your tickers, look at what price looks like, and find a way for you to make that trade when it's time to make it, because I guarantee you there's going to be a trade out there. There is going to be a trade out there that you can make, and I guarantee you I'm going to make one of them. I'm going to make one of them at least and push it over the weekend. And it's going to be a 100% trade. And then it comes down to how much confidence do you have in that trade that comes from prep, being confident in the price move because you've seen it, you're experienced with it, and you're able to make that in terms of sizing. Because again, you only put $200 on a trade. Well, it's not very good. That's not very good. You're not going to really make a, when we get hypey, and we're going on some pretty big winning streaks, and we talk about life-changing trades. Why can't tomorrow be your life-changing trade? Why can't you just place the trade? You just have to place the trade. That's it. You can get out of the trade. You put a stop in. Those of you that don't put stops in, you're just lazy, and you just don't give a fuck. That's fine. You want your excuse to why you lose money every day to be because you don't have a stop? Then just keep doing it and keep losing money. No one else cares. We'll all laugh about it. We'll laugh with you. You want to turn it into a meme? We'll make a meme about you. That's fine. But for those of you that want to make a trade again tomorrow, buying on this fear that you see in the market and that the market feels, we've done it every single day. And we continue to do it. And it's better than the money. It's to not only the learning and the things we're learning from the market and the way other people are trading, it's that you're able to make trades at any point, whether the market's down, up. You don't care what the hell it looks like, what it's doing. Your cousin Greg is he's drowning in his macaroni bowl from his late night last night, and he's making bad trades. And you're over here, and you're trading value, energy. You transitioned out of your fucking death boat trades this morning. You're ready to buy more tomorrow. These kind of things, they feel good because you don't need to know when things are going to happen, specifically in terms of timing. You just follow some simple rules and continue to trade. You don't need to trade out of a situation, right? When others are having a hard time making mistakes, if you just keep cool and don't go into the whole, this dooming sort of mode. I know some of you, as soon as you see this, you get turned off. Some of you just look at this and it just feels bad. This should not feel bad. There should be no reaction at all. All you should be seeing is, it's kind of, I gave Brian a hard time, but that's a good way to be looking at things, is when you go, oh, is this a bear flag? That kind of thing. You want to be always seeing something and not going, well, oh no, it's going to go down then. No, it should always be something, how do I enter a trade here? If I was in a trade, how would I exit it? Look at the chart through the lens of trading and do something, right? See you, Brian. And again, a lot of you tomorrow are not going to do anything. You didn't need to do anything today, that's fine. But if you don't do something tomorrow again, how many days are you going to let yourself go without doing something, right? You could have shorted anything today. Last week, I told you just buy a put. On Wednesday, I told you just buy a put. Just buy a put. Anywhere. Could be $2, I don't care. Just buy a put. What about in here? What about buying long on energy? I'm going to go through some charts right now, individual charts, and show you. I don't think we need to do much on the macro side. Again, we understand, and we're going to go tomorrow. We'll be able to really understand. Let's look at some charts here today. Okay. How about something like Discovery that has nothing to do with any macros? What about Discovery chart? This was up today. It's continuing to go up. What have you done on this chart? Again, it doesn't matter if the whole average is going. We only need one trade. You only need one trade. It can be an individual ticker. We pick out individual tickers. We pick out individual sectors. Those charts that give us something. You don't need all the other charts to be doing something. You don't need the entire market. If your only time you're making money is when everyone else is making money and the whole market's going up, then you're going to have a really fucking hard time making money, right? You need to be able to pick and choose your spots and go make trades during times like now. You know how much more money you made on this chart today because everyone else was losing money? You could have just sat in your position or even bought this trade today and made a ton of money, and it didn't even do anything today. Nothing even happened. What about Viacom? The same chart. I just want to show you how trends can exist outside of what you maybe understand the market's doing, right? These probably make you feel really silly, and I know a lot of you have looked at these charts and continue to look at them. And again, I'm going to keep using the energy thing. If you missed the energy thing and you just weren't listening, especially yesterday, because we put more bets on yesterday, that oil specifically, not just energy as a whole, that oil was going to do well. That Gus chart, using the leverage, right? I even thought we got a little late, but we didn't. You know what you're making on this move today? You didn't have to do anything. You didn't have to do anything. You could have bought it any time. Exxon. Some of you still haven't looked at any of these charts. You haven't looked at the charts. Because if you did, I know you'd be in them. I know when you guys want to be a part of a chart, you guys get excited about certain things you see. Energy is just not as sexy. Banks are not as sexy. REITs are not as sexy. I know they're not. I know they're not. CZZ. I posted this short-term pattern over here. It's a part of the oil trade. You're going to be buying on dips, pullbacks, right on support, right on support. Anthem. Oops, there you go. Anthem, been on this trend. You know what you made today on this chart? And it's going to be in the trend line, it looks like tomorrow. This is going to be a big trade in here because you know how quickly it's going to move through this trend? Probably quicker than this. Probably quicker than this. This is during market turmoil in your eyes. Think about what happens on these charts that have been trending through weak markets. It's been a weak market right now. A lot of sensitivity to a lot of macro events going on, right? These charts are going to absolutely explode as soon as the demand comes in, right? As soon as the demand comes in and value turns into momentum, right? It's going to happen, right? You're going to get big moves. So again, volatility, you get these spikes, but is it sustained? Is it going to be sustained on volatility? Well, first of all, 99% of all vol is being shorted still. It's about 99%. Everyone just shorts vol, right? So you get spikes. Tomorrow, what's going to happen? Do you think tomorrow is going to be up? Yeah, historically, we retrace. So you can just, using just the sense that, okay, you're likely going to bounce back just because of a historical sense, you can make trades, right? You could just wait for that. You could turn yourself into a trader where you just take a short-term trade, you buy marches here on the dip, and you trade it back into the halfway point on the candle, right? What would that be? Well, if we think about it in terms of the SPY, well, that's almost 2%. Almost 2%. That would be pretty damn good. You know what that is on marches? That's at least 100%. 100%, that's what we look for, right? You don't need to fully understand where price is going, but we can understand in the short term every single one of the trades to make. And again, it's been choreographed every single time. Because even these weird positions we found ourselves in, where things are not lining up in terms of timing, we've had transition points that do line up with the pullbacks every single time. The CCL chart is a good example of one because, again, it lines up with our trend line, and we take profit because of a transition, and we're looking to re-enter and buy it, right? We're looking to re-enter it, even though the market's pulling back. We understand that we're removing demand, but because of that, it's giving us a better price. And so we know it's time to be getting into that. So tomorrow, what are you going to be doing? If you're not looking to take some of these trades tomorrow in the morning, again, it's going to hurt because when times like today happen where some of you might have had a hard time, that gain that you had at the beginning of the week should be able to cover all that. You don't need to make money every single day. You can have 4 red days and 1 green day every single week and be a good fucking trader and be a profitable trader. You can sit on unrealized gains for an entire week and then take profit. And then you can be pushing things over a weekend and you only make gains on a weekend. It can be like that. It just depends on how you're trading, right? How you're swinging trades. So again, you don't need a green day every day. It doesn't need to happen. So again, don't be turned off. Those of you that, again, when you look at others are making money. I can tell you that I did relatively well today, considering how quickly you had to get out of shorts today. Just to show you, like, if we look at some of these, because I know it's not exactly the most straightforward thing in the world. Something like GRWG, right? Taking these shorts, we trade from the open, right? And we talk about price pulling in. Let me show you the 5 minute. We talk about price pulling into support to go long. When we trade short, we're waiting for it to pull into resistance, right? Pulls into resistance. Here's the opening candle on GRWG. Now we want to get into pot stocks long, and probably tomorrow we're going to have another opportunity to push another trade into the weekend, grab another 100% on it. This trade from open, price opens up. Now, is the market going bid today? Well, we saw in the market that was not the case from the open. So you're watching the market, you're going, okay, we are turning. So what happened up here on GRWG? You have tightening. There's tightening. The market is all doing the same thing, pulling back. So somewhere, this is 5, 10, and then the start of 15 minutes. I imagine you guys can figure out how to make a trade in 10 minutes. You can figure out how to make a trade in 10 minutes because you go from bid to tighten to selling. That's what we look for. Those 5-minute candles that turn. That third candle should be your decision-making candle almost every single time. That's on the average velocity. Somewhere in here, you're able to buy a put. That's what we do. You buy it open. You buy an open and make your trade. When are you getting out of this trade? I know it looks really simple in hindsight, and I promise you it's the exact same look during the trade, right? Again, we put this on. This is the first candle. Let's see, can you figure out how to get in and out of this trade? Again, watching on the replay here. When you see these candles pop up, right? Okay, well now we're up probably what? 50, 60% on the put. How do I exit this trade? I can exit anywhere in here. You can get out right now. Get out. Get out. You can get out. You don't need to keep pushing the trade. You don't need to be fucking perfect. Can you get out now? Okay, you want to keep holding it? Do you want to keep holding your put? You want to hold your put? No, you don't need to. You don't need to for it to turn back around. It's not a long-term trade. It's just right fucking now. It's right now. You're betting on something to happen right now, not for it to continue. So again, those short-term, those breakdown charts I post, I removed the days. I didn't post the dates the amount of days last night because it's not the same thing for me to say, oh yeah, it's going to be 30 days. Like on the long side. The long side is more likely. On the short side, you're making the trade in that moment. The opening shorts were the moment. That was your moment to make those trades, right? Can you revisit your advice on contract selection for puts specifically? I remember you mentioned trying to target lower open interest short terms. I'm not sure if I misheard. Yeah, so for on the put side, right, you're trying to buy puts. First of all, you need to be more sensitive, right? So you need to be more sensitive in terms of timing. So as soon as tightening starts, you have to exit the trade. And in terms of entering, you can't enter too late. The reason here being, and this is going to line into the OI and volume question, is that on the short side, people are not buying put. There's no one coming to save you. No one's going to buy puts down here. It's not the same as buying calls at any time because you're betting on the overall market to continue to trend. Right now, this would be against the trend, be against a trend. And so what do we look for? Well, you don't want to buy contracts that have a shit ton of supply in them. If there's a bunch of people in there, why? Because those are people that have been in that short position since before today, since before that moment. They're already been in that position. What are they looking to do? Well, they want to take profit too. What are they going to do? They're probably going to be taking profit a little bit sooner. They're going to be willing to take that because they've already been gaining. They've already been gaining on their puts. And so anyone that was in puts from the day before, they're willing, as soon as this candle goes, to start taking profit. what is happening in this, as people start to exit the trade, you don't have anyone to buy your puts. So if you buy contracts that have too large of a number of open interest in there, and again, you don't know what the volume's going to be. You don't know what the volume's going to be until that moment is happening. So you want to be, just like as always, you want to be capturing the move. So you need to be getting in. You can't be chasing. But the problem is over here, the exit on the puts become very difficult. If there's another 100 traders in there trying to sell their puts too. Because there's not going to be that many more people trying to buy puts over here. No matter what it is, right? Now, more so on, again, charts that have continued to push from like the day before, but are not specifically bearish charts. So charts that are bullish overall, it's like you try to go short the SPY. Okay, there's plenty of liquidity over there. That's a little different. But on charts that don't have as much liquidity, if it's not bearish overall, people are not holding short. They're not holding shorts for a long time. No one's using puts as hedges. People are not really selling puts. So you sell calls as a hedge to your long position, right? You're not really fucking around with puts as a hedge. You'll sell calls. You will sell calls to hedge your long position with shares. Very unlikely that you're not buying puts. That's not really a part of the way you're going to be pushing along there, because it doesn't really make sense in terms of timing. So there's a reason why there's so many more calls, because they're used as hedges, right? And because people like to buy fucking calls. So market makers have to make calls. Puts, a lot less supply. So there's a lot more targeting on contract selection. You're a lot more targeted in terms of what you're buying. Of course, it's the same. You want to be buying at the money. You're buying short term because you know you're going to be in and out. So March monthlies for a day like today. If there's nothing in terms of volume to be getting on March monthlies to short for puts, then you go into the next month, April's or something, right? But you know you're not going to be in there for very long. I mean, this could have lasted for 20 minutes. Could have lasted for 20 minutes. Could have lasted for 2 hours. You don't know. All you know is you're not going to be in there by tomorrow. You're not. I do not take any short positions and go, okay, I'm going to push this over the fucking weekend. Can't wait. No, I'm not betting on charts that are continuing to go down. I will go long on charts that are trending to the upside. I'm not going to go short on charts that are trending downwards. It's not the same practice. So every time you make a short, you should be looking to turn that into a trade to get as much of a move on those contracts as possible in that short amount of time, right? And so that does mean avoiding others. You want to avoid people as much as possible while still being in something that's desirable in terms of volume. So again, this is that game theory sort of idea where everyone thinks this way. And so since we all think this way, that's the way you have to trade it. Since everyone's going to make that decision the same way, those same people will be buying those contracts that have high volume of that day but lower OI. They'll be the ones picking up your contract and you're selling to them, right? Because someone's going, oh, let me actually get in there and short this. You need to be selling to the people that are willing to buy at that moment. Otherwise, you're the guy that's stuck bag holding something that no one else wants anymore, right? Very hard over here for it to continue, right? As soon as that tightens, see you later. You're too late. You can try. You're not going to get a good price, though. This is not what the option chart looks like. Option chart looks like quite more drastically this way, right? This move lost a lot more points than this gained here, right? In terms of the underlying. So again, a lot more sensitive. And you need to be, again, realizing that things don't just continue, right? I mean, even when we look at the underlying today on this is very timely. I mean, it's really not a surprise when the market starts to try to tighten and hold its position, and if it comes back down, it comes back down, right? Which is, for instance, we took opportunities to buy things here in some areas, right? In some areas like travel. Travel's a good example of where I bought here. As soon as it broke back through its level, we took profit, and I talked about it with Brian. Brian left, but Brian was talking about it in terms of something like BBY here, right? BBY here, when this first starts, look, he was like, isn't there a bear flag in here? And see how price just continued? And so you could have tried to short in here. And the problem is that price continues, right? And so in terms of shorting, we're very short-term oriented. So you need to do it from open. You can't do it from over here to catch the bear flag, right? You need to do it from here because look, it didn't actually break down from there, right? And so it's very easy to go try to preempt a move to the downside. Now, yeah, made a move through here. Well, then you need to be making the move when it's happening, which again is the only time you can truly do it is from open, because otherwise you're just playing with fire if you're trying to time it after open. Like, oh, let me go short lunchtime, the lunchtime pullback. Well, okay, that's at least a fucking plan. That's a plan. That's a plan that, okay, we're going to lose volume during lunch and it's going to pull back. That's what the market does. You can short during that time, but even then, okay, everyone's making the same trade at that point as well. So you have to use the same sort of mentality. But again, you have to pick your spots very carefully during that, and especially on a day like today, that everyone is trading. All the volume is front-ended in at the end of the day, right? So the low volumed in here is even worse for puts. So I don't like to, you could get a lunchtime pullback every single day. It's very hard to fucking short it if there's not enough volume, right? If it's not liquid enough, then you can't do it. So open and close are really the times that, again, that we take trades to begin with. So outside of that, it's very hard to start looking at it through the lens of trading, right? But I mean, anyway, I mean, there was obviously an absolute shit ton of charts you could have shorted today. So, I mean, in terms of how you can do it, where you can do it, I mean, let's just be honest. You could have picked and choose. Obviously, I had a list, things that I wanted to short, things that I've been trading actively, so I have a good understanding of supply at least. I don't like to go short something I've never looked at before, right? So, again, it's just not going to happen. So again, for tomorrow, what are we looking for? We are looking for historical retracement. We're going to take that trade from open. We're going to take the trade. Let me put it onto like something that we can all agree on. Something like airlines, right? So AAL opens on its trend line, goes bid from the open. We're buying it. We're not buying from open to specifically push over the weekend. We are buying from open to retrace on a historical understanding that, okay, if there's a pullback day, so AAL, for instance, pulled back about 4%. Now, again, you can buy on pullbacks today. I'm sure some of you bought on pullbacks today as well. If tomorrow you're buying it open, you're buying that trade to have it retrace to about halfway from that move. So if something went down 4% today, you're trading it up to about 2% higher, right? From that point, if that's coming into lunch, so this is pushing into lunch, continues its trend towards the upside here, recovers about half of it. At that point, you're then making the decision whether or not you're turning that trade, and from the gains that you have in terms of risk reward, whether you're pushing that over the weekend or not. In a lot of circumstances, we are going to be pushing shit over the weekend. Why? Because we get paid for doing so. We get paid for doing so. And what's the highest, what's the probability? Probability is that since we continue to pull back further and further, it becomes a better and better price each time. Think about what we've gained each time that we've traded over the weekend. So for instance, this trade over here, AAL on Friday into Monday, gapped up almost 6%. This was 6% up here. You take the trade, you take it off. Why? Because it's 100% on the contracts. It's 100%. You get paid 100% for doing nothing over the weekend. You get paid for risk. Then you take the profit. You take the profit every time. Talked about with DraftKings, Penn. You just take the profit. You don't need to think about it further. You don't have to. Because it could continue. If it continues, then you buy back in. That's fine. But you'll take home some money, right? So tomorrow we're doing this. We're going to be buying from open, so we have the whole day ahead of us. We can use Friday as a day to realize gains so that by come close, we can push trades over the weekend. And all those gains that we're going to gain on Friday by just using a historical understanding of some retracement, capturing those retracements and taking profit on some of those will allow us to push risk over the weekend because we've gained things on Friday. So again, it's a process of building. We're going to take gains on Friday to cover risk over the weekend. So those trades, those short-term trades you took today, or you're going to take from Friday open tomorrow into lunch, once you realize them, those gains are to cover the risk over the weekend for the larger trades that are going to pay you more. Let's say you gain 20% on a trade on Friday. That's to cover the risk of maybe losing 10% or so by come Monday if it doesn't work out. Now, that would be the maximum I would say in terms of a downside risk you'd be taking, because again, you should be getting stopped out on your contracts. But again, you're not risking more than a premium, and again, your premium's not going to go to fucking zero. If it does, it would be very similar to the Cosa Nostra account that we have that is now minus $600. So, again, no stop. Just let it run. I know you guys are like, yeah, fuck it. We'll let it run over the weekend. It'll be fine. No, you could have sold that and bought it lower, but I think it's funnier that we let it just continue to run, and we'll see how our account does, right? We're at, what's our market value is about $1,400. You guys get like $100 of cash, so you get like $1,500 in that account. You're doing fine. You lost half, but bag holders are us, right? So it does look to be a good day tomorrow. I'm based on the energy and stuff, I see that no one really got too bent today, which is great. And I think some of you taking advantage of shorts today feel a lot better that you shorted, did some things, right? You didn't have to time anything perfectly. You just took the trade. In terms of charts tonight, I'm going to refrain from posting. Basically, I'm not going to post breakdown charts or anything like that. We'll stick with the bullish because, again, our bias is to the upside for tomorrow. So we got our shorts out of the way. If tomorrow's a short, sort of a day that the market continues to pull back, then I'm not looking to do anything because then we're just wrong. We're just wrong at that point. So I'm talking about like specifically our value picks, right? If everything pulls back tomorrow or something, then we're just going to be on the sideline. Is that likely? No, but again, we don't get to just use our story, our bias, right, to solve everything. Our bias is our plan. And if things go against the plan, right now they're not, but if they do, then we make a change. Well, again, the market's our teacher. The price is what dictates what we do. We react, right? So we continue to push our long positions on value. We continue to transition where we can. We're not going to be shorting into the weekend. So we're not going to short into the weekend. It's just not going to happen, right? The bias right now, I don't care what it is, you don't short into the weekend right now. It's just we haven't changed it yet. We're in a bull market, right? We're in a bull market. We're going to continue to bet. There's been certain times like last year where we were fucking going short, going long every single day. We were all over the place. I'd be long on bios, be short on value, be long tech, I would be long Amazon, short Apple, long Tesla, short Neo, all these crazy things, right? Right now, we're really one way, long value, short tech, short growth. And we have an understanding that even then, though, we can only short through these moments that our rules allow us to, which is on these swings up to resistances. We short from the resistance, or really we're taking profit. But again, we haven't been long tech. So for tech, it's every time it pulls into the resistance, we short. And we're never betting against the pullback. We only short when it comes from the level and down. We do not short when it comes into this here, and we buy on that pullback on our side of the aisle. So again, those of you that continue to be in energy positions as well, banks, everything, travel. Again, travel was a transition day today. How much of that was affected by the market? Like half of it. But again, half of it was also affected by we've been trending up and rallying for fucking 2 weeks. So again, those need to consolidate. It doesn't look like they're going to. They're pulling back instead. So again, we're not changing bias. We continue to trade the same way. And again, they all equal the same thing. Yields increasing here on the bonds, tech being short, they all lead to the same thing, which is that value continues to increase and become better and better of a trade. It just continues to lead to that. They all lead to that. And so we're not going to change it. We just continue to do it. And especially for weekend trades, you get to do whatever the fuck you want. We get to find trades that have nothing, they have no connection to everything, and that's where we thrive. You and I both thrive, all of you, because we have smaller position and we can be sharp. We can get in and out of things very quickly. We can enter something for the risk that it's going to work because we can quickly get out because we're not putting $1 billion on a trade. We're not putting $1 million on a trade. we get to get into a position, and if it goes up from there, we keep pushing it. If not, we get stopped out, and it doesn't cost us anything. It doesn't cost us anything to try. And that's what's so important to understand for all of you that are still learning and don't have, like, I don't know how many trades it takes to get under your belt to do it, but certainly in terms of hours, the 10,000 hour mark, you just got to keep making trades through there and understand that by making that trade, it's not going to kill you. It's not going to kill you. It doesn't hurt you to keep making those trades. Tomorrow, make a fucking trade and open. If you need to, put the trade in before the market even opens. It shouldn't be sent to the exchange. But if you need to, then just do it. You got to do something tomorrow. You need to make something happen. I'm not saying force trades, but tomorrow, yes, force yourself to make a trade tomorrow. Those of you that haven't really done much, it feels, because again, there's a lot of people in here that are doing very well just because they're fucking getting their feet wet. I'm not saying put both your feet in the bucket, but put one of them, okay? Get one of your feet wet. Because again, if you do, it's likely going to turn into something good because again, you're in a good spot. There's a good understanding around you, right? There are things that are working. Again, we continue to get confirmation. I want you to get a little excited for tomorrow. You see the market right now? Look at the fucking market. How can you not get excited around this? For those of you that are new, it just seems like everything is always like this. It's not always like this, guys, right? I was worried that when we started to get into here, we were done. We were starting to we were going to get back to some trending and normal, everyday dad things, dad bod sort of market. You're being given a gift again. Why? Because this over here, and I talked about it, this is the best time I've ever had. The best trading I've ever had was over here last year because of COVID. All of this volatility, again, even though it was trending, I mean, this was way easier when it was just trending, but even through this, the volatility, this is where you make your money, and it takes one trade. It only takes one trade, guys. So again, you should be getting excited. You don't need to be perfect. You don't need to make money every day because, again, it only takes one. It only takes one 100% trade to turn your 2% average into 98, 99, right? That's all it takes. So be prepared for tomorrow. Look at what you can for charts. You guys know which charts you're pulling. You look at the charts, find out where the support is. If you need levels, then fucking ask me. I'll post the charts that I have not posted. Again, search for them before you ask, but go look at your levels, find out where the level is. Everything is likely retracing, bouncing. We'll see where futures are. You don't need to watch futures all night. We'll see it in pre-market, 9 o'clock. We'll see where the level is, where we're opening up, and that's it, right? You don't need to kill yourself over anything, but find those levels, find out where you'll be buyers, and that's it. And there's going to be something there. There's going to be something for everybody. So enjoy your night, your morning, your evening,